Hi, this is Michael O'Leary from Buy the Book Taxes, and I'm here today to speak to you about how you solve your tax problems. And the way to solve it is compliance. In our last few videos, we've talked about the IRS collection process. We've gone over some of the collection letters that the IRS sends out to you as they attempt to collect the debt. And in the last segment, we spoke about the final notice that the IRS sends out before they are going to levy your assets. So now the question is, how do we fix this? And the answer is, you get yourself into compliance. Before you can enter into any payment agreement with the IRS, in order to pay you back tax debts, you need to be in compliance. If you want to make an offer in compromise, if you want to set up an installment payment agreement, if you just lost your job, or you have some medical issues, or you got divorced, and you think that your income will not support paying the IRS, you can request to be currently not collectible. But for any of these things, currently not collectible, installment payment agreement, or offer in compromise, in order for the IRS to grant any of these, you must be in tax compliance. So what is tax compliance? How does the IRS define tax compliance, and how do you get there? Okay. You must have filed the last 6 years of tax returns in order to be considered in compliance by the IRS. If any of the last 6 years are unfiled, get them filed. There's two components. You have to be current on your filings. You must be current on your payments. What are those payments? For a W-2 employee, it's withholding. You must ensure you have enough being withheld in federal income tax from your payments to satisfy your tax liability given your income. If you are self-employed, you must make quarterly estimated payments in the tax year that you are earning the money. Not on April 15th after you file your tax return. You must be making quarterly estimated tax payments inside the tax year. And if you have a business with employees, you must be filing and paying quarterly payroll tax returns and paying the payroll taxes quarterly. You cannot be withholding income taxes from your employees and not filing those returns and not sending the money to the IRS. That'll get you in big trouble. Okay, let's talk about W-2 withholding. There's a few rules regarding compliance with W-2 withholding. When you do your tax return, if you have withheld enough so that your balance due upon filing your tax return is less than $1,000 due the IRS, you are considered to be in compliance as far as your federal income tax withholding. Also, if you have withheld at least 90% of that tax year's tax liability, you are also considered to be in compliance. Or if you withheld 100% of the tax liability on last year's tax return in the current tax year, and that number gets bumped up to 110% of last year's number, last year's liability, if you make more than $150,000 a year. So if you owe less than $1,000 in federal income tax upon filing your tax return, if you have, through withholding, covered at least 90% of your current year tax liability, or you had either 100% or 110%, depending on your income, of last year's liability withheld in the current year, you are considered compliant as far as W-2 withholding. If you are self-employed, you must make 4 quarterly estimated payments in the year by the 15th of the month. So, for example, for tax year 2018, you should have made payments by April 15th, June 15th, September 15th, and then January 15th of 2019 to cover your 2018 tax liability. You can't wait until April of 19 and then pay the taxes. You will get interest and penalties on the unpaid balances. And if you try and set up some sort of payment plan and you haven't yet paid your estimated taxes, they won't do it. If you have any questions about any of this, please call me. I would be happy to help.